Good morning. Watching global cues and expecting the Indian indices to mimic the same has been the usual routine. But the start of the year has seen the main Indian indices plunge 10%, making it among the worst performers in emerging markets. Meanwhile, the story was different on Wall Street as Dow clocked its best January since 1997. So what's the fuss about Egypt now? It's not an oil exporter to begin with and just controls about 2% of the world's oil supply. But oil prices continue to move higher, with crude prices spiking to multi-year highs and Brent crude surging to $100 a barrel on Monday. Back home, domestic oil firms hiked jet fuel prices to as much as 4.5%. After staging a comeback of sorts and pairing losses, the Indian indices look set to see some green. The global cues seem to point a better start today. For the day, investors will keep a close eye on the auto and cement numbers besides the manufacturing PMI data. The Asian stocks have risen for the first time in 3 days. US stocks also posted solid gains on Monday. The sentiment remains weak though, and any recovery must not be seen as a complete change in trend. The BSE will provide delivery-based trading in single stock futures and options in its derivative segment from today, expiring on or after 13th April 2011. SEBI had allowed the introduction of physical delivery in equity derivatives. There will be no change in other contract specification. Settlements for stock futures and stock options will be delivery based, with the exercise style of stock options being European, that is, they can be exercised only on the date of expiry. This effectively means that all open positions at expiry will result in delivery obligations. The dollar fell against the euro, British pound and Japanese yen. Nirmal Limited has fixed the offer price for acquisition of shares held by the public at Rs 260 apiece, following which the company will delist from the bourses. Siemens Limited share price zoomed after its German parent Siemens AG made a voluntary open offer to acquire 6.62 crore shares or 19.82% at a price of Rs 930 a share on Monday. Moving on to our recommendations, the technical calls for the day are: we recommend high-risk traders to buy Maruti above Rs 1,255 with a stop loss of Rs 1,235 and for the target price of Rs 1,295. We advise buying Educom above Rs 477 with a stop loss placed at Rs 465 and for the target price of Rs 502. Our derivative strategy for the day are: long Union Bank February futures in the range of Rs 329 to Rs 331 for the target price of Rs 343 and with the stop loss placed at Rs 324. Long Mahindra and Mahindra February futures in the range of Rs 715 to Rs 717 for the target price of Rs 740 and with stop loss placed at Rs 705. Thank you. Wish you have a great day ahead.